Okay guys, so welcome to this video where we're going to have a look at the Turkish lira in today's markets, because this Thursday is a big event for the currency. We had the central banks meeting where they're expected to raise interest rates to try to get the Turkish lira to stop its massive depreciation that's happened in 2020 and start to get the Turkish lira to claw back some of its value that can help the economy, and more importantly, higher interest rates to help the country deal with high inflation in Turkey. So why has the Turkish lira in 2020 lost a large percentage of its value? So in 2020 so far, we've seen the Turkish lira lose about, so if we go from the beginning of the year, the Turkish lira has lost at this moment 35% of its value. And that is because, most importantly, if you look at Turkey, we have inflation at 11.89%. The interest rate is at 10.25%. So what that basically means is people in Turkey have no way of protecting their wealth against inflation because they can't put their money in the bank and get a higher interest rate than the rate of inflation. So the purchasing power of their currency is depreciating. And that means that investors do not want to be buying Turkish assets because the value of the currency will not hold when you have higher inflation. So for a long time, the central bank has not been raising interest rates above the level of inflation, and that's meant that the Turkish lira has got weaker and weaker and weaker because every single central bank around the world has to maintain inflation, and they do that by having an interest rate that keeps inflation in check. But for some reason, the Turkish prime minister or president Erdogan, he has a very unorthodox way of looking at inflation and interest rates. He says that high interest rates cause inflation, when of course the rest of the world says high interest rates reduce inflation because it reduces the demand for goods and services and makes borrowing more expensive, and that means that prices drop from lesser demand in the market. So what does this mean for the currency? Most importantly, we just have to remember that if the Turkish central bank on Thursday does raise the interest rate from 10.25%, which we can see right here, and if they raise the interest rate up to around 15%, that's very positive because that means the interest rate should now be higher than inflation, and that means the Turkish lira should be holding its value over the rate of inflation. And then that means also that the Turkish central bank's interest rate is more attractive for yield-seeking investors. So remember this spreadsheet I've created for you guys. So if we're looking at, for an example, the United States, which is the reserve currency, is the base currency, and then we've got Turkey in this exchange rate, which is the quote currency. So if the interest rate in Turkey goes up to 15%, and at the moment the interest rate in the United States is only 0.9%. So if this is the case, then there's a massive difference in interest rates between the two countries. Sorry, let's put it as 0.25% because it's within the range of 0% to 0.25%. So again, if we are buying the Turkish lira against the US dollar, and I was to buy one lot of this currency pair, if I was to sell my US dollars in exchange to buy Turkish liras, and I traded one lot of this in the currency pair over an annual 365 days, I'm going to be getting paid 14.75% interest on the amount of Turkish liras that I purchase. And that means that every single day over an annual period, not every single day, you would receive 14,750 Turkish liras in profit because of the difference in interest rates. And that means you would be receiving 42 Turkish liras per day into your trading account every single day for holding this trade. On the flip side, if we bought the US dollar against the Turkish lira, you'd be losing $42 a day, and you'll be losing $14,750 over an annual 12-month period based on trading one lot size. So clearly very unattractive to be buying the US dollar against the Turkish lira with this negative interest rate differential, not in favor of the United States compared to Turkey. But the only reason the Turkish lira was weakening so much against the US dollar was because there was no point in owning the Turkish lira over the US dollar because your Turkish liras was losing value because of inflation. But now the interest rate should be going above inflation. your Turkish liras will be holding its value, and that means buying the Turkish lira back is more attractive because, number one, the Turkish lira could then start to appreciate against the US dollar. So let's say the Turkish lira starts to gradually grind lower, and let's say it goes back to the levels it was at the beginning of the year. Turkish lira appreciates by 30%. On top of that, you're going to be making 14.75% interest on top of that over a year. So let's say you could be making 15% on that return plus a 30% on that trade. Now you could be making 45% return on your money over an annual 12-month period, as long as the Turkish lira keeps its value against the US dollar and doesn't weaken any further. And if they have a higher interest rate than the United States, and that interest rate is protecting Turkey against inflation, then you can see the bigger picture. So that explains the moves in the market. I hope that makes sense, traders. And this Thursday, if the interest rate does go up to 15%, or let's say the Turkish central bank raises the interest rate even higher than 50% to say to 17%, that means the Turkish lira could get really bullish, and we could see downside movement on the US dollar against the Turkish lira. We could see downside movement on the euro against the Turkish lira, which again has a lot of room to move. We could see downward movement on the British pound against the Turkish lira. So there's quite a few trades we could take this Thursday if the central bank does raise the interest rate at a higher rate than the markets are expecting. That's even more bullish for the Turkish lira. So it's a really interesting trade. Let's see what happens. Hopefully the central bank does provide an aggressive rate hike to show the markets they're committed to containing inflation, and that then means the Turkish lira becomes even more attractive to buy because you can work out the difference in interest rates. And again, traders, if you want to get this spreadsheet yourself, remember it is available now for download on my website. You can buy it now, and you can know this difference in interest rates does play a key role for every single currency pair you do trade in the forex market. So there we go. Let's look at the Turkish lira. Let's see what happens on Thursday. But we could start seeing again the Turkish lira really start to appreciate should the downside momentum continue. Okay, guys. So that's a look at the Turkish lira against the US dollar, and we're looking at Turkish lira against the euro and the pound. Let's see what happens on Thursday. Thank you.